This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, May 10th, 2016. Euro dollar. So the euro continues to extend its declines off that recent 2016 high at 116.17. At this point, key focus now comes in by 112.17, which is next critical support. A break below that level would do a good job of officially putting the pressure back on the downside. While we have seen the market stall out in recent trade, the market will need to break back down below 112.17 to officially take the immediate pressure off the top side, despite this latest impressive pullback. But overall, the market has stalled out by some critical medium-term resistance up into the 115 to 117 area, which does keep the longer-term pressure on the downside and suggests that we could be seeing a significant shift back to the downside over the coming days and weeks. Any rally should be very well capped now ahead of 115, while only back above that recent high at 116.17 would delay this current bearish outlook. Sterling dollar. So cable remains pressured to the downside despite that recent breakout that we saw above some critical resistance at 146.70. The inability for the market to establish a close above 146.70 does keep the pressure on the downside and open the door for additional weakness over the sessions ahead, back down towards the 140 area, which guards against that recent critical 7-year low from February at 138.36 further down. At this point, we would need to see a break back above that recent high all the way up by 147.70 to officially take the pressure off the downside. Dollar yen. So dollar yen continues to extend its impressive correction higher, with the market now trading back towards 109 area. At this point, though, the rally is classified as corrective and a lower top is sought out, while this overall downtrend remains intact below 111.89 ahead of the next major downside extension back towards and eventually below the 105 area. Again, only a break back above 111.89 would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss has seen an impressive recovery over in recent trade, with the market taking out key resistance at 110.62 to now open the door for the possibility of the next major upside extension towards 112 further up, which represents some multi-month highs. At this point, any setback should be very well supported into the 109 area, with only a break back below 108 to really take the pressure off the downside and potentially suggest a shift in the structure. Aussie dollar. So a major development for Aussie in Monday trade, with the market closing below the 100-day moving average. At this point, the break and close below the 100-day moving average does open the door for the possibility of additional declines over the coming sessions back towards psychological barriers at 70, while any rally should now be very well capped ahead of 75. Again, the break below the 100-day moving average is a significant development, putting the pressure back on the downside, with any rallies now seen well capped towards 75. Dollar CAD. So dollar CAD has seen a significant break up to the upside in recent trade, with the market now establishing a potentially convincing, meaningful base after trading down to fresh multi-month lows below 125 at 124.61. The break back above 29.90 does strengthen this outlook, with the market potentially seen accelerating towards next key resistance at 132.19 further up. Kiwi dollar. So Kiwi setbacks have accelerated now below some key short-term support at 67.59, with the break below that level now exposing a deeper drop towards the 65.46 area over the coming days or coming sessions. At this point, look for any rallies to be very well capped up towards 69, with only a break back above 70 really to compromise this ongoing bearish outlook for the New Zealand dollar. SPX 500. So the S&P 500 has been consolidating over the past couple of sessions, but overall there are signs of the market once again stalling out above 2100 in favor of the next major decline. A break below 2021 now is the critical level to watch, with a break below that level to strengthen this outlook and accelerate declines back down towards the 2016 base at 1808. Gold. So although we've seen some setbacks in gold over the past several sessions, the market ultimately is expected to be very well supported on dips towards 1200, with only a break back below 1190, some critical previous resistance, to compromise this outlook. Look for a higher low to now set up somewhere ahead of 1200 in favor of the next major upside extension back above the 2015 peak at 1307 and towards 1400 further up.